Welcome back. So today I'm going to break down my entire stock portfolio, share with you what are the counters I'm holding and the history and the reason why I bought them. So let's start off with US stock market. So my top 3 holding, Google, Microsoft, Apple, that almost account for 40% of my stock portfolio. So 3 reasons why I buy these 3 companies is because number 1, strong leadership and management is always key when I select stock. A strong leader, strong management can turn a loss-making company into a profit-making one. Whereas a shitty leader, shitty management will turn a profit-making company into a loss-making one. So if you examine the leadership in these 3 companies, all very solid, very capable, all very good credential. So these 3 companies, if you examine, they don't run it like a crony family kind of style. They don't only hire people in their top management, only hire people like they know, that kind. They don't do that. They also don't hire their own family members. Rather, they pick truly talented people. Example, the Indian CEO, the Asian in the top management, UK, US, everyone. So that's number 1. Number 2 is because they have very sticky effect, like a moat like that. It's very hard to disrupt, people like from using Google tomorrow. Everyone is so used to Google search, so used to YouTube watching video like you. People are also very used to Microsoft OS, Windows, Excel sheet, Hotmail, Outlook, that kind. So that's what everyone is using to communicate. It's very hard to just say, oh, let's stop using Windows, let's stop using Microsoft Excel tomorrow. You can't do that. So number 3 is because these companies are very cash generative. They are not just burning cash, they truly are able to generate profit. So next up is, I want to highlight is about 10%, just 10% of my portfolio is in things like TSMC, Nvidia, Tesla, Amazon, and also small percentage in McDonald's, J&J, Coca-Cola, and Pepsi. Reason why I have all these dividend-paying stocks still is because of legacy. I bought them long ago, and they are only like 10, 20, 30 shares, so I might as well just keep it. Whereas things like Tesla, Nvidia, right? I choose to buy them is because even though they are overvalued, I want to have skin in the game. I cannot predict the future. I don't know when are they going to announce some great news, deliver some great products. By the time they announce great products, right, it will be too late to get in ready. Prices will have skyrocketed. So I want to build some position and have skin in the game. Okay, and lastly, I also have about 20% in SPY 500 and QQQ. Reason being is because I want to have some form of diversification, because I realize I'm quite heavy on tech, and you never know when tech may start to lose its flavor. Having something like SPY 500 give me a little bit of like a mini hedge so that I can be exposed to other industry as well. So that's sum up the US part. So next up, let's move on to the Singapore stock market. So in the Singapore stock market, right, I have about 20%. It makes up my entire portfolio. So mainly logistic, shopping mall, and industrial REITs. So let me name them. Fraser Centrepoint Trust, CICT, AIMS, AMP, and what else? Let me think. Also have Mapletree family, the Mapletree Lodge, Mapletree Industrial, and Mapletree, the shopping center, and as well as Star Hill Global. As for the rest, I have things like OCBC Bank, Telco, I have Singtel, and Defense, I have ST Engineering. So all these are mostly dividend stock, which makes up about the 20%. And the reason why I keep them is because their yield is decent, 4 to 5%, though I find it insufficient. That's why I stopped adding them. But one of the key reasons why I want this Singapore stock is Forex risk management. You know what? A lot of currency has been depreciating. Example, USD, Malaysia ringgit, even Japanese yen, they have been depreciating. But Singapore dollars have been going up strong and steady. So that's why if I have some Singapore stocks exposure, right, it kind of protect me from the currency risk or forex risk, you call it. And then lastly, I just want to highlight about the remaining 10%, which is mostly in the LSE, London Stock Exchange, and China market, which is Alibaba. So let me share a bit why I bought into LSE, London Stock Exchange. Reason being, they have only 15% withholding tax as compared to the US market 30% withholding tax. So I bought into IWDA, which is a global index fund tracking a developed country, and the CSPX, which is actually a mirror of SPY 500, but is domiciled in Ireland. That's why they enjoy 15% withholding tax instead. So that's why I bought into LSE. And of course, Alibaba back then, it was because I wanted exposure to the China market. Yeah, I'm still down about 20k from Alibaba. So no regrets because I wanted to have exposure. And the lesson I learned from investing in China stock is you always have to factor in political risk, not just look at the fundamentals of the company. So that's all for my entire stock portfolio. So some of the key lessons that I've learned, and I hope you can benefit as well, is when you pick a company, always pick one that has strong leadership, strong management. Remember, they can turn a loss-making company into a profit-making one. And number two, pick company that have very sticky effect, strong moat, and also company that actually able to generate profit and cash. And lastly, I just want to highlight is that you really cannot predict the future. So no matter how confident you are in a single stock, you never go all in. You don't bet your entire farm or life savings into one stock. That's how you destroy your entire financial system you have built. So don't do that. And that's all. And if you have any questions, be it on my stock portfolio, why I bought them, or option selling, right, feel free to put in the comments and I'll try to answer them.